Hello everyone, it's Wednesday, March 5, and today we will take a close look at the euro and the British pound charts to evaluate potential market movements. As you can see, the euro extended its bullish run against the dollar despite US President Donald Trump's imposition of trade tariffs on Mexico and Canada, as well as his threats to extend them to Germany. There has been growing speculation in the market, and the United States may pursue a compromise, a sentiment confirmed by U.S. Commerce Secretary Howard Lutnick. He stated that talks with the representatives from these countries are ongoing and a middle ground is likely to be reached. This way, a key factor behind the rally in risky assets. After all, the imposition of tariffs did nothing to boost market confidence. The euro's rally was further fueled by reports that the German government is considering unlocking hundreds of billions of euros for defense and infrastructure investments. The news of possible stimulus measures contributed to growing optimism among buyers of risky assets. Likewise, the British pound extended its gains heading into one-month high. Sterling continues to trade upwards, with momentum showing no signs of slowing. Yesterday, traders also observed positive data on the euro area's unemployment rate, which fell to 6.2% in January. Combined with dovish comments from Fed official John Williams about the need to cut interest rates, this boosted the euro, allowing it to gain further ground. Let's take a closer look at today's macroeconomic calendar. It includes a patch of services activity data for February, which is due from Italy, France, and Germany, and the Eurozone as a whole. The Eurozone Services PMI is expected to come in at 50.7, signaling weaker growth for the third consecutive month. The composite PMI went down by subdued manufacturing activity, is forecast to remain at 50.2. If the readings come in at above market expectations, the euro could gain further upside momentum. Conversely, disappointing data may trigger a correction in the euro. The UK is also set to release similar data, with the composite and services PMIs expected at 50.5 and 51.1 respectively, which could provide support for the British pound. Later in the day, the focus will shift to the ADP National Employment Report. U.S. private payrolls are estimated to have increased by 141,000 jobs in February, down from 183,000 in January. This could signal a slowdown in the U.S. economy and labor market, potentially exerting additional pressure on the dollar. It is also worth paying attention to U.S. services activity data, which is expected to show positive growth and help reverse the dollar's recent decline. Turning to technical analysis, the 1-hour EUR USD chart shows that the 1.0600 support level could serve as a solid entry point for long positions. A decline followed by a false breakout at this level combined with positive economic data from the euro area would create an opportunity to add further long positions. If the price breaks through and consolidates above 0.635, another buy signal would trigger, with the euro likely extending gains to 0.665 and possibly 0.694. At this level, I would recommend going short on the rebound, targeting a 25-30p move. Short positions at 0.665 and 0.635 should be only considered following a false breakout, with a target 1.0600. If the price falls below this support level, the euro could dip to 0.567 and potentially 1.0532. At this mark, it would be wise to enter long positions on a rebound, expecting a 30-35p move. Going long at 1.0567 and 0.600 will only be relevant following a false breakout. Speaking of the British pound, short positions can be considered at 1.2808 or 28.48, following a false breakout. At the 28.88 level, going short on a rebound could offer an intraday correction of opportunity of 35-40 pips. Buyers are likely to regain control around 27.62. A false breakout at this level would trigger a buy signal. However, if buying activity remains subdued, the pound could fall to 27.21 as a part of a bearish correction. Weak UK data combined with strong US jobs figures could push the British pound currency further down to 26.79. At this level, I would recommend going long on a rebound targeting a 35.40p move. Going long at 27.21 and 27.62 on a false breakout would also be a wise move. Best of luck to all.